Good morning and welcome to The Mint. I'm Andy Hodges. Let's start off by looking at the Zimbabwe Stock Exchange and also world markets in currencies, commodities, metals and energy. Now, in our main story on The Mint this morning, Zimbabwean miners have pleaded with the country's central bank for provision to retain offshore accounts in order to raise funds easily. Unki Mine Chief Finance Officer Colin Chibafa said in light of Zimbabwe's foreign exchange shortages, government needed to allow mining firms to have offshore accounts which were banned during former Reserve Bank of Zimbabwe Governor Gideon Gono's time. Chibafa said it was presently tough for miners to raise money given they were losing over half their forex earnings to mandatory withholding thresholds and fixed costs being made in foreign exchange. Government reviewed downwards the forex withholding thresholds from 70-30% to 55-45%. Now, in Zimbabwe's budget on the 14th of November 2019, the Minister of Finance made no changes to the retention thresholds for gold miners. We wait to see if the next monetary policy statement will make such adjustments. Miners claim that most of their imports and machinery are imported and so are pressing for an increase in the retention percentages. Colin Chibafa, Unki Mine CFO, had this to say at a recent mining conference.
I acknowledge the governor's comments that he doesn't want us to die. So at the current levels, which were set before there were other charges that came in US dollars, we cannot survive. So it is important that payment of charges in US dollars should be dropped for mining companies and we retain the existing retention threshold. Governor, the last thing I'd say to you, your predecessor took away a very key instrument that was key for the growth of the platinum sector. That was SI 25 of 2005. With that SI, companies were able to retain offshore loans, were able to retain offshore accounts, and thus able to raise funding. And those key requirements were what saw the opening up of Zimplats, the opening up of Unki. So those are things we need to look at if we are to revitalize.
The miners are adamant that lifting of that threshold will go a long way to boosting their production and hopefully maybe deliver more gold, platinum, silver, etc. into Zimbabwe's economy. According to Quartz Africa, Pan-African e-commerce giant Jumaya has suspended its marketplace business in Cameroon. Jumaya did not publicly announce its imminent closure in the country, and the move took many customers and local staff by surprise. The company that has positioned itself as the first African tech firm to be listed on the New York Stock Exchange indicated the decision to quit the market is due to unfavorable conditions on their path to achieve success. However, Rebecca Enonchong, tech e-commerce entrepreneur and CEO based in Cameroon, has a different opinion. Posting on Twitter, she had this to say. Jumaya is simply a badly run business that is incapable of understanding its market, refuses to act as a good corporate citizen, and thinks Africans are simply a commodity, a means to an end. No business with that attitude can succeed in the long term. She then continued with another tweet, which is even harsher. She said this: Jumaya refuses to report earnings by country or by line of business. If any savvy reporter or investor required that info, the illusion of a 14, now 13, country African e-commerce giant would quickly dissipate. The only thing giant about Jumaya is their funding and their ego. Strong words there from Rebecca. But Jumaya's struggles in Cameroon may be an indicator of similar moves to come in its other African markets, as the e-commerce company tries to figure out how to find its way to stem mounting losses driven by the costly investment required to build e-commerce operations in 14 different African markets. Outside of the very largest African markets like Nigeria, Egypt, Kenya, and South Africa, it could be difficult to build a general e-commerce site at scale today. Bearing in mind, of course, the issues that generally African markets have less developed logistics and transport infrastructure. Jumaya is the third e-commerce platform to quit Cameroon after French-owned AfriMarket earlier this year and Cdiscount in 2016. I'm Andy Hodges, and you've been watching The Mint. Please follow us on our Facebook page, Zim Papers TV Network, our website, ztn.co.zw, and YouTube under ZTN. Your comments are welcome via our Twitter handle at ZTN News and, of course, on Facebook. Join us here on The Mint every weekday morning at 6:30 a.m. Central African Time. Goodbye, and you all be safe.